to start. All right, hey guys, this is Roaming Millennial. Welcome back to my channel. With me this morning, I have Charles Thorngren of Noble Gold. Thank you so much for joining us.
Oh, it's my pleasure. Thank you for having me on.
So for anyone who's not familiar with you, I was reading about you online. You have a background in investment and finance. Why don't you tell us a little bit about yourself?
Okay, I'd love to. When it comes to finance and investing, I've been in the industry for a little over 25 years. When I first started in the industry, it was stock market, it was financial mutual funds and investment banking. From there, we've grown to where I am at now, looking for diversity, making sure taking care of customers' funds the best way possible. It morphed into metals and other things as well. So for 25 years, it's always been about finding what's the best value for the customer. And that brings us to where we're at now. You know, precious metals offer a hedge that you can't find in the market in general. So when you're looking for diversity, you find ways to do that. When people have funds in stock markets and mutual funds and 401ks, that's great, but you need that counterbalance, and that's what was missing from the industry, and that's why we're here.
Mm-hmm. And speaking of markets and everything, and by the way, guys, we're going to be taking questions from the live chat. So if you have anything that you want to ask us while this is going on, feel free to just type that up. I'll be keeping an eye out. In terms of markets, during the 2016 election, we had a lot of people saying that Trump's election was going to be sort of a doomsday for the markets. There's going to be this huge collapse, kind of similar to what we saw post the Brexit election. And as it turns out, markets have been pretty strong, rising steadily, if not slightly volatile. So what's your take kind of on what we're seeing right now under the Trump administration?
Great question. And I want to go back to a little bit of on how you asked it. Markets go up and down. They're supposed to. It's healthy. A healthy market will have peaks and valleys. So the whole doomsday around the market really was a political motivation. So from there, you have to be careful, because the fact that it was time for there to be a pullback in the stock market played into a political party. Every 8 to 10 years, you should see a correction in the stock market. If you don't see a pullback between 15 and 20% within that 7 to 8 year period, and it goes longer, you're just going to see a bigger pullback. That's historic. That's what facts do. When you apply logic to the context of investing and remove the politics from it, you'll see that. So this talk about the pullback, if he gets in, it's the end of the market. It really was a matter of timing. Now, when you have a businessman take office like we had, he's going to do things different than a politician. This is why you saw the 17% move up in the market after his election. Because the community said, we have someone now who understands a balance sheet running the country. Mm-hmm. Where we went wrong, though, is that he's the president. He's not the CEO of America.
Right. And I mean, just how much of you're kind of saying that a lot of this was, I think, political fear mongering, which I think is right. But at the end of the day, how much influence do you think that someone like Donald Trump actually has on the markets themselves? I mean, versus Congress, versus other things that are happening, currency exchange rates. I mean, how much of this success or failure can we even attribute to someone like Donald Trump?
It's difficult. If we had an issue where the president's own political party would enact the things that he's trying to accomplish, you could say he had some sway with the economics. Interest rates are definitely an issue. The way that we tax corporations is going to be an issue. So income tax for investors is also an issue too. The more money people have, the better chance that they invest. So these are all things that he does have some sway if he were politically accepted. We're seeing an issue where even his own party is not backing up the things he's trying to do. So when you have that scenario, you can say he could be effective, but until his party backs him, he will be completely ineffective.
I think that's something that a lot of us are feeling right now, especially people who, I mean, like myself, I supported Trump during the election, and I've also interned in the past for Speaker Ryan himself, and it's just been a little bit disappointing, or at least that's how I feel. Seeing, okay, great guys, you have all of Congress, you have the presidency, now let's get something done. But it's too bad there's a little bit of I don't want to say civil war, because that sounds like something's actually being done, but I don't know, just lack of action. In terms of what we're seeing in the economy now, how would you say this compares to what we saw in 2007? Because I think that's probably a lot of viewers are around my age. That's probably like in terms of like big market dips, the most recent one that we can remember. And obviously, like you said, there are ups and downs, but I think that's probably like freshest in our minds. So, if something like that were to happen now, do you think the American market is in a better place to sort of like, I guess, absorb those losses losses in wealth, like what we saw when the housing bubble collapsed?
Actually, I think we're in a worse place. And here's the answer why. We will see some form of correction. And in 2007, when it started with the housing and it leaked into the banking system, and then that led into the stock markets, we had some financial tools to use, and that was the quantitative easing. You had the Fed come out and release money. It's an ugly fix for a bad situation. The issue really is that the follow-up to it was never handled correctly. So when the money went out there and you had those trillions of dollars flow into the market, it was never used in the right place. We now have a Federal Reserve Bank that has almost $5 trillion invested in that market, because when they gave that money out, they gave it to the banks. And then they told the banks, you have to have ownership in a financial firm. This is how we got, JP Morgan Chase Bank. This is how we got Bank of America Merrill Lynch. They were all separate up until that point. Banks were banks and investment firms were investment firms. So when they combined them and they gave banks trillions of dollars with a low interest rate, the banks didn't reinvest that in the normal things. It didn't go into the economy of Main Street. It went into Wall Street because they were getting a better return. So when we say what happens when the next collapse comes, it's a tough situation because there's still those trillions of dollars from the Fed in that market that is going to be coming out. So we don't have that tool to fix it. It puts us in a position where we could see a prolonged and a very aggressive pullback, one like we haven't seen for about 60 years.
Mm-hmm. And you mentioned the Fed, and I know I don't know if you're a fan of people like Ron Paul, but he's often been very critical of the Fed. I think deservedly so in a lot of situations, but he's also talked a lot about things like the gold standard, and I think that's an interesting conversation to have, especially when we're seeing things like what you mentioned, quantitative easing. I mean, like how would you feel about something like that? Because anytime as someone who, I think World War II was learning about it was one of my favorite lessons in history. Just anytime I see quantitative easing, like the whisper of hyperinflation is always at the back of my mind. So what are your views on that?
And it is true. I mean, we will enter a period of hyperinflation. There is no doubt about it. It's not a matter of it's a matter of when. And after going through a prolonged period of extremely low interest rates and supposedly low inflation, because those numbers are skewed. We have to remember the formula they use to figure out inflation now doesn't include some of the key things like food, like oil and gas. So when you're looking at inflation, you really need to say you want the numbers that affect you on a day-to-day basis, and putting gas in your car and feeding your family and feeding yourself. Those are the numbers you really do care about when it comes to inflation. So the number we have now is this phantom number because it really doesn't reflect true inflation. Mm-hmm. So you have low interest rates, you have this momentum building where money has to come out of the markets from the Fed. And with that, you have interest rates that will have to go up. There's going to be no other way to draw investments into the United States if there is no form of good return to do so. Mm-hmm. When the Fed goes and sells back that debt that they bought, They need to sell it to somebody. And that has typically been China, Germany, Japan. At these interest rates, those countries are not looking to buy our debt anymore. And that's where you're going to see the hyperinflation kick in, because they're going to have to raise the rate to draw interest to sell those bonds off.
Mm-hmm. And I think, all of this is someone who's, I'm like in my early to mid 20s right now, and I look at people like my grandmother, and the kind of economy she was in when she was, I guess, preparing for her retirement investment. And I've got to say, like, it seems like we're in a whole different world. I mean, I don't know if I'm in a place right now where I don't know, like, I feel like I know what are the right investments to make, or if I feel confident enough to be able to place something like the stock market and take that huge of a risk. And that's also just, I'm not the kind of person who can do any sort of gambling. I mean, even just cheat on Neopets used to make me nervous. But why don't you tell us a little bit about what you guys at Noble and Gold do, and you sort of like how you think that your company relates to everything that's going on. And by the way, thank you so much for coming and talking about this and supporting this channel by doing so.
My pleasure. Well, what we really help people to do is create a plan so that they can retire. The most important thing that generations going forward can look to do is to be able to take care of themselves when they go to retire. We have a system now that doesn't function correctly. While we should all continue to strive to fight for change and fix it, which is very important, we should also protect ourselves in case that doesn't happen. So what we do is we create a plan for your retirement accounts. And everyone should be funding a retirement account in some form or fashion. You get the write-off, you're going to protect yourself and take care of yourself when you're ready to retire. In that plan, you should have precious metals. It's just being diversified. And at some point, you're going to be in the stock market. It's going to look more attractive. You're going to move money there. But when you have a plan where you're truly diversified, you're covering all your bases, you smooth out the rough edges of investing. And ultimately, that's what it's about. It's about getting a great return over the long period of time while minimizing the downturns of markets. And that's what precious metals do for you. They smooth out the retirement plan.
Mm-hmm. And how would you, because I know there's like silver and gold, and how would you compare the two? Because the funny story, I actually have a friend whose father is a very devout Catholic, and a couple of years ago he was convinced that the end of days were coming. So he actually sold off all of their assets and bought silver because, kind of like you were mentioning, he thought it was more reliable. And actually, obviously the earth is still here, but at least his investment, it's not like he poured the money away. He still has that. But how would you compare the two?
It's really an interesting thing. Two different metals. I think of the two metals, silver is more attractive because of the ratio and the uses for silver. Silver gets used in so many things. Electric cars, solar panels, anything electronic has silver in it. And most of that goes unreclaimed when you get rid of it. So you have silver being thrown away every day. That kind of demand, you have an increased demand on top of a limited supply, the price will have to go up. It's going to become more expensive. And I think when you look at something that has two aspects to it, gold and silver have a monetary component to them. But then you take the manufacturing and add that as well, silver has the potential to move aggressively more than gold does. Mm-hmm. So in a world where, France came out and said they plan on being completely electric cars by 2030, no gasoline engines. To do that is going to be an awful lot of electric vehicles, and it's going to be an awful lot of silver.
That's interesting. Yeah, I had no idea that silver was so widely used, because I guess, as someone who's just really not familiar with electronics, and you think of like gold, obviously the gold price of gold is much higher than silver, but I guess, yeah, you have to take into account, I guess, how desirable each of those metals is. But in terms of like, and this is like, as someone who is, if you're anyone is at all familiar with my channel, sort of distrustful of the state and government, how would you say that, like the typical pension plan that you might be paying into, or Social Security, compares with IRAs? Like how different are the two? How much should we be relying on each of them, if that makes sense?
Interestingly, pension plans are fantastic as long as the company maintaining it is doing its job. So when you're looking at your options, if you have the ability to contribute to a pension plan, you should absolutely do so, because there's a benefit to it. Your money comes out before taxes. So there's a benefit there, and then you have your savings as well, as long as they give you good options to invest in. And that's the secret, is if they're not giving you choices that you like, then maybe you've got to go with your own plan. You got to do your own retirement account. So those are some of the things you want to check on and see. What does the plan offer me? Everyone should have some form of a plan that, even if it seems minor to you, it will be important later, because the most important thing for any investment is time. The longer you give it to grow, the better your returns will be. So you get started and you let it go to work for you, really is the answer.
And so, I mean, with your company, I think when we think of things like RAs, like are you very involved with millennials? What's your demographic looking like, and how young is I think the right time to start thinking about these things?
If you have excess funds and you planning for your future, you can put some away, you should do it. We don't limit it to a number. Most people think investing, they think the old guy. People invest. Everyone invests. If you've been employed and you had a 401k, that's an investment. If you've changed jobs, you can move that 401k. You can roll it into a self-directed IRA and buy precious metals. You can move it into the stock market. So there are options. If you've had a job where you had that retirement account established for you, there's something you can do. And I think, interestingly enough, people talk about millennials. I think millennials are different than a lot of generations before. The younger people, they're a lot more involved, whether it be the internet, whether it be just the social applications where we can reach out worldwide. It creates a stronger, more passionate generation, I believe. They feel like they can do more, and they have more knowledge. So I think millennials in this aspect may be a scenario where, from past generations, may be more involved, may be more able to invest. Things are changing. The workplace is changing. So, we're happy to have customers of all walks. Those who are retired, those who are just starting. We don't limit ourselves.
And something I've actually just seen in the live chat is the mention of cryptocurrencies. Now, a lot of people who are millennials and who are perhaps a little bit worried about market fluctuations, a lot of us are looking into things like cryptocurrencies. So how would you compare the value and, I guess, the ability of precious metals to something like cryptocurrencies, which I think a lot of millennials are interested in right now for, it seems like a lot of the same reasons you've been talking about.
It is. They're very similar in nature. The big difference between the two right now is that precious metals have already been established, so the process is a lot smoother and a lot easier. Cryptocurrencies will be allowed in IRA soon, and you can invest in them, and that's something that in the next coming weeks you and I will talk about again. I think that we'll have a great conversation on the cryptocurrencies. If you're interested in them, I think it does make sense. But again, diversify is important. So not all cryptocurrencies. Get some cryptocurrencies, get some gold, get some silver, find the right stocks, invest in a broad section of investments. That's where you'll see your best returns.
And so just before we go, is there anything else that you want to add about, what you and Noble Gold do, and how you think that, the average person watching this who might not have any experience with investments, might be able to take away from this?
Really, it comes down to this. We help with the entire process. So if there's questions, if someone has questions, they should give us a call. We'll walk them through it. We'll give the information they need. We'll send out an investor's kit. Go to our website. There's some great information in there. But the information's free. And it's really important to inform yourself. Spend a few minutes. Go through the information. See if there's questions. Give us a call. That's the best thing to do, because we don't know if it's right for somebody until you look at it. It's really that simple. And it leads into some very great discussions. As the millennials are a curious generation, it's going to lead them into some other things that they hadn't even thought about before. So the quest for knowledge will come from it too. So it's a very interesting concept when you start looking at currencies in general, and you'll see where gold and silver fit into this world and into the political world as well. You'll see a big link there. So the best thing to do, go to our website, give us a call, get our investors kit, talk to one of us, and we'll learn together if it's right for you or not.
Oh, thanks. And I always appreciate when information is made available and for free, especially for if a customer isn't that well informed themselves. Right now, I'm in a position where I spend a lot of time in Canada, and I'll just be going to Hong Kong. But I get paid in American dollars, so I'm trying to strategize whether it makes sense to move currency around, especially Canadian dollars so weak. It's been a nice little boost every time I convert it, but so far that's about all the financial planning that I've had a chance to do. But gosh, just had my 23rd birthday. I'm like more than halfway to 25 now, and it's starting to weigh on my mind. But yeah, thank you so much for speaking with us, guys. A link to the Noble website is in the description if you want more information about any of this. And is there anywhere else that people can find you, or that people should look out for you?
Quite a few places. The website's the best place. You go there; it's a great website. You'll see some of our videos there. Go to our news section, read the blogs we have, the news stories we have. You'll find a lot of information there.
Okay, great. And thank you guys for joining us. Thank you again, Charles, for speaking with me, and we'll see you next time. Bye.
Oh, it's my pleasure. Bye-bye now.